What's going on, guys? Welcome back. And in today's video, I'm going to be taking a look at Facebook. So Facebook obviously has its earnings coming out in just a day. So whether or not you guys are watching this before or right after their earnings report, we're going to find out how they did. But in my opinion, I figured right now is a good time as a current Facebook shareholder to kind of give my analysis and update with the company and kind of share with you guys my overall thoughts about the company moving forward. Now, based off what you guys told me when I posted a poll in the community tab, obviously you guys want me to focus more on the numbers and a little bit with the story, but mostly on the numbers. That's what you guys came here for. So I'm going to be focusing mostly on the numbers. I'm going to go through a snapshot of how the company's performing and really where it is in the overall market. And then I'm also going to be bringing you over to my financial model on Excel and really breaking down what are my growth expectations for Facebook moving forward, and then what is my overall share price that I am currently buying in on Facebook at. So hopefully you guys get some use out of this. Let me know what you guys think about Facebook in the comment section down below, and make sure to smash that like button. But without further ado, let's get in the video. All right, so let's first by taking a quick snapshot view of Facebook. What is it right now looking at from the top down, and really how does it kind of sit with the overall market? So right now, if you look at the fundamentals of Facebook, their price to earnings ratio sits at about a 25. Their EV by EBIT sits at about a 19, so that's a little bit more of an accurate way to judge the valuation of a company, especially one that has no debt like Facebook does, so it gives you a more realistic metric for looking at it. And then you can look at their earnings yield based off of their EBIT, and they're sitting at about a 5%, which is definitely not a bargain basement type of price, but it is above the average company in the S&P 500, so that's something I like to look at. And then their return on invested capital, which in my opinion is the most important metric to look at when finding out if a company is a good or a bad business. And don't take my word for it. This is what Warren Buffett says and what Terry Smith says, and these investors have definitely proven their merit with their track records of the past few decades. But Facebook is currently sitting at a return on invested capital of roughly 35%. Now, when you look at that and then compare it to the overall S&P 500, Facebook's return on invested capital blows almost every company out of the water. So obviously this company is run very well and is also generating a lot of return for its owners. So that's something I want to look at if I'm taking an ownership stake in the company. So now taking a quick look at the balance sheet, let's just say, okay, obviously we can see here that Facebook still has a mountain of cash. They will probably never not have a mountain of cash with how much free cash flow this business generates. But, having a few $1 billion in cash is nothing to, sneeze at, especially with the fact that Facebook takes on no debt or very negligible debt in every quarter. So that's something that, in terms of the balance sheet, in terms of the safety net of this company, I am really never worried about Facebook going bankrupt. So my preservation of capital, I don't really have to worry too much about when I put it in a Facebook stock. And then just for a quick, laugh, we can look at their current ratio and their quick ratio. And both of these are well over 4, which means that this company would have to go through hell and back in order to face any type of financial stress. But now moving aside from just what currently is going on, let's see what their growth is expected to do. So their growth over the past 3 years on their top line has been experiencing roughly 37%, and on their EPS has been experiencing roughly 24%. So when you look at the company is one of the largest companies in the world, and it is growing at an extremely fast rate. So what does that really mean for future prospects? Well, I'll get into it just a bit with what my assumptions are for the Facebook growth over the next few years, but people are still expecting them to have very modest to robust double-digit growth rates on both their top line and their bottom line going forward for the next 5 years. And I would personally say that that is accurate. I would tweak it now, especially given with what is going on right now with the current global environment situation, and I'll get into what my assumptions were for that and how I discounted all of that in a little bit. But right now you can see a company that is very stable, highly profitable, and doesn't really have to worry about any liquidity ratios going on, is still growing at an extremely fast rate. So with all these wrapped together, I would still give my seal of approval and say that Facebook is a very high quality business. And in overall, say if you break off the 3 metrics of financial health, sustainability, profitability, and then just future growth, I would give Facebook a 14 out of 15. So I'm just going to break that down right here for you guys. You guys can kind of see that this is what I look for when I look for, is this business a good business? Is it a permanent business? And do I think that it's going to be something that will generate me a lot of capital moving forward? And now, so enough of the snapshot. Let me take you over to my Excel document where I will go through exactly what's going on with my personal, opinion of the company, and I'll really break down what my assumptions are made and where do I see Facebook trading for over the next few years. All right, guys, so let's take a quick look at Facebook's financials and really give a breakdown and discount the future cash flows to really figure out how much do I think I'm willing to pay for Facebook right now, and how much do I think that Facebook stock is worth. So looking at it, you can see here I've broken down information from the statement of cash flows, the income statement, and then also the balance sheet, and really gutted what do I expect out of Facebook going forward. These are all my adjustments made for Facebook and kind of how much of all of that relates back to the revenue. I put everything in relation to revenue for this model because, in my opinion, when you look at any company, sales are what's going to drive the company in the future. Sales are going to be what consumers demand, and the farther and farther you go down any type of financial statement, the more muddy it can get and how real those numbers are. So in my opinion, I like to just kind of base everything to revenue. So doing that, obviously we're going to have to figure out, okay, what type of growth is Facebook going to be experiencing over the next few years? Now, as you can see down here, I kind of do a quick snapshot and figure out, okay, what kind of compound annual growth rate do I think Facebook's going to be going through over the next few years? Now, in my worst case scenario, I'm giving this year a total wash. I'm going to say it's going to lose 50% of its revenue growth. So it'll actually be going down by 50%. And then it'll start to rebound and then revert to the mean the years after. And then I kind of give a different scenario here. You can kind of see what growth rates I'm expecting. And then averaging those all out, I get a certain compound annual growth rate. Now, plugging that into Facebook and pretty much for my worst case scenario and an okay scenario and then a good scenario, I get stock price ranges anywhere from $176 all the way to $272. Right now, assuming the growth rate tapers off to 3% over the long term, at roughly, a share price range between 176 and then 272. So what does that mean? Obviously, you've been able to buy Facebook right now at much cheaper valuations than any of these things, even my bear case scenario. And that is what I did when I picked up my shares. So if I can bring it over here, not too long ago, Facebook was trading, down at $136 a share. And already since then, the share price has seen a massive amount of growth. Let's just see from its recent low, Facebook has already recovered about 33% to shareholders. So Facebook is definitely a company that will just not stay down. And realistically, I don't see anything really going down for the company long term. It does have to worry about companies like TikTok and other social media platforms growing in ownership and also growing in popularity. But in my opinion, with WhatsApp still just recently being unlocked, Instagram still having a pretty large traction, Facebook actually starting to see user growth tick up again, I'm not too worried about Facebook, at least right now with what I know. There's always possibilities that could be going wrong for the company, but right now I think it's a cash machine, and I expect it to continue to generate a lot of cash for me as an owner into the future. So that's my overall takeaway from looking at the financials. So as you guys can see, I am definitely still very bullish on Facebook, and I still think Facebook has a very long runway of growth ahead of it for the future, and I think that as a shareholder, I am going to get rewarded handsomely for my personal investment. This is all assuming based off my growth rates that I showed you, but I am very happy to have Facebook in my personal portfolio. So I would highly recommend any of you take a look at Facebook, do your own financial analysis, and figure out, does Facebook belong in your portfolio? But that's it for this video, guys. Hope you guys got some use out of it. Let me know what you think in the comment section down below, and I will catch you in the next one. Peace.